Another question, please. Okay. In the absence of none, we'll be moving to another interesting topic. Here, we'll likely have to do some form of calculation. But because this is our first class for the diet, I won't go into calculation, but I'll prepare your mind to calculation. Now, I want anyone in this class to give me summary of IAS1. Anybody? Summarize IAS1 for me in like maybe 4 sentences. What are the major key takeaways? Even everybody will do it. I will call name. I'll start with our co-host, Aziz Motunrayo.
The IAS1 is an accounting standard that teaches us how to present and prepare financial statements. So there are some general features of the IAS1, which are the going concern, the accrual basis, we have the fair presentation of financial statements, and compliance with the IFRS, the materiality and aggregation, the offsetting. Then we have the relevant information to users, which are the assets, the liability, the cash flow, and so on.
I like that part. Cash flow and so on. We need to go and find the so on ourselves. But then, thank you so much. That's a very good summary of the standard, to be honest. Why? I'll take that again after every one of us has given their point. Okay, Blessing Akinyede. Aziz, you can unmute yourself. I mean, you can mute yourself.
So when you started, you told us that we have a total of 41 IAS, and looking at IAS1, which is known as the presentation of financial statements. So can you hear me?
I can hear you, man, 100%.
Sir?
I can hear you, man, 100%.
Okay. And there are features relating to the presentation of financial statements, going concern the accrual basis, the fair presentation of financial statements, compliance with IFRS. I told us about the component and element of financial system. Element of financial system, we have assets, liability, equity, income, and expenses. We also talked about fixed assets, that is, which is now called non-current assets.
Go ahead. You are making points.
That's all I can say.
That is all you can say. Fantastic. That's which you can see also make points. Thank you. Elizabeth William.
Okay, so you told us about the content of IAS1, and you talked about representation of financial statements. Then you talked about the general features, that is the going concern, offsetting, frequency of reporting, comparative information, the consistency of presentation. And you also talk about the relevance of information to the users of the financial statements. That is the assets, liabilities, equity, income, expenses, cash flow movements, contributions by owner, and distributions to owner. We also talked about the component of financial statement. That is statement of financial position, statement of comprehensive income, statement of changes in equity, statement of cash flow, that is IAS7, and the statement of accounting policies and explanatory notes. Then you told us that we have the element of financial position and the element of financial performance. Then you told us that it's categorized into two. Then the first one, which is the element of financial position, is the assets, liability, and equity. Then the second one, which is the income and expenditure. Then you talked about the assets, you talked about tangible and intangible assets, and you also explained the amortization charges, and you explain the classification of expenses. That is the classification of expenses under function and nature. Then under function, you talk about the cost of sales, distribution costs, and other expenses in finance and the rest. Then under nature, you talked about work in progress, cost of materials consumed, staff costs, depreciation, and so on.
Okay, that's brilliant. The three of you, to be honest, I'm going to give you guys 80% because 50% is past my for ICAN. So you guys made it 80%. That makes sense. So what I've tried to do is to make it very simple for all, because there's this notion that accounting is hard, right? So of course that they have their reason why they're saying that, but I'm telling you here that accounting is very simple, and you need as much as possible to understand the basic principles. Once you can understand the principle, you are good to go. So one of the things we do here at ICAN Online is, yeah, we understand that this is a virtual class, so we want to engage everybody. So that's why I'm asking you to please give me a recap. Of course, as we progress in this class, I will not be doing that, right? Because this is still new, and I want everybody to be active. Imagine that I'm there with you. I'm sure you'll give me 100% attention. So that is how you should be doing going forward. And thank you for that quick summary. It makes sense. So we are moving to another sweet topic, very sweet one. Like I said, here we are going to do computation. Also, we are supposed to do computation IAS1, but I decided to move it to the next class. I have my reason. New class should be a friendly type of one, nothing too harsh to do. So for IAS2, which is our next topic, we prepared computation for it already, but I will decide to skip it for next week. So next week we'll be doing calculation on both IAS1 and IAS2. Then we'll move into our topic for the day. Okay. Thank you for that. Can we continue?
Yes, sir.
Yes,
So
sir.
now, when you see any chartered accountant, tell them you now know what the standard. Just tell them you now know it. So when you see IAS2 or when you hear IAS2, what comes to your head? I'm sure in your 8 years, even though they didn't discuss it with you, they will tell you all the standards, just like I mentioned them to you earlier. They might not go into detail because at that level, nothing too much to do, right? So when you hear IAS2, what comes to your mind? What comes to your mind? Is inventory, right? That is what comes to mind. Good. Now, let me now ask you this very simple question. We are all using phone, right?
Yes, sir.
Is phone an asset or inventory? Is phone an asset or inventory? Anybody? Even not anybody, everybody should talk because we are all using phone. So we want to know now, is phone an asset or inventory?
It depends on the purpose the phone is used for.
Let me see the person that is talking. I want you to depend. Oh yeah, let's just see your it depend.
Sir?
Continue.
You know, some people use their phone for business, for business
Okay.
purpose. So
Online business.
yes,
WhatsApp.
yes, sir.
WhatsApp
So
bag.
yes, to sell bags, shoes, clothes, and the likes. So to them, the phone will serve as an asset. I think.
Last he said.
So inventory for those people that used to sell phone, that are selling phone, the phone will serve as an inventory to them.
Wisdom. Last he said. Okay, blessing. Akinyede. Don't say that is what I want to say. You have to say.
Phone is an asset because it is what I own. It is for me, so it is an asset to me.
Blessing, do you want me to ask you a question?
Yes, sir.
Do you still remember how I define assets according to IAS1?
Sir?
Do you still remember how I defined assets according to IAS1?
Yes.
Do you want to remind us the meaning of assets? We are waiting for you, ma.
So is it just asset or
No,
current
just
or no
assets.
current asset?
Just assets. No, just assets. I know you know everything, but just give me assets. I have my reason. I want to be very sure of what you just said. Okay, you're trying to check the notes, right? Did you pen down that when I was talking?
Yes,
okay, so
yes,
let me help. Okay, let me help you. Can I help you? Or you've seen it? Have you seen it?
So you can help me.
Okay. Hello, class. Should I help her?
Yes, sir.
Yes, sir.
I can see Elizabeth said yes first, so that when it's her turn, I'll help her too, right? Nice one.
Yeah.
Okay, so blessing, we define assets as resources controlled by the entity as a result of past transaction or as a result of past event from which economic benefit will flow to the what entity. So if you remember, I didn't talk about ownership. Of course, an organization can own their assets now. Most business own their assets, but the standard is actually talking about what? Control. They must have control over it. And also, an asset must be used for something such that there should be a flow of income to the entity. So from what you have mentioned, you said phone is an asset because you own it. That's what you said, right? Because you own it,
yes,
and you ended it. It's not giving you anything at the end of the day. It's not giving you
So
anything.
it is giving me something because I can use my phone to read. I can use it to get information.
So you are going to start your own IAS. Okay, that makes sense. I love that. I love that response. Okay, tell us inventory, Blessing. Give it a try. You might not go through my notes, just give it a try. Okay, Elizabeth,
Sir.
give us your view, what an asset, what inventory.
Okay. So to me, okay. I'm sorry, please, what's the question again?
So what is an asset? What is an okay, if you are using your phone, is your phone an asset or an inventory?
So my phone is not an asset to me. Yes.
What is it to you?
It is an inventory to me because my phone is not an asset because I don't gain anything from it. I'm not getting anything from it. I'm the one rather spending on it.
Go ahead, wisdom, go ahead.
Okay, it's a liability to me. Then yes.
Like, yes, I agree with you because that's where I'm going. I agree with you, but continue.
So inventories are like goods now, like stock.
Yeah, so let me help you. I think the three of you nail it, right? But for the purpose of this challenge, I'll give it to Aziz Motunrayo. She actually nailed it so well. And I like the angle you pick it from for Blessing. Yes, I like that. Even especially when she said, no, I won't help out with this. I think that also makes sense. Elizabeth, you went outside the context. And that makes sense also, to be honest, because I will have thrown a question at you, but you already answered that question. So now, let me go by Motunrayo's point. For those that are using their phone to do business on WhatsApp, phone is an asset. Phone is an asset. Now, for the people selling phone, they are selling phone. Phone is a what? An inventory. Are you there? But whether phone is regarded as an asset or inventory is still a class of assets in its own way. Because inventory falls under what? Current assets. Blessing went out of the context by saying our own phone is like a liability. She's not gaining anything from the phone, rather, she's spending. Well, in as much as you made point, I can argue it with you that you are gaining things from your phone. Maybe you have just not take time to analyze what you are gaining. But I will agree that because of the fact that you are not doing any business on WhatsApp, you are not selling clothes, you are not selling bag, you are not online CEO, I will agree with you that phone is not an asset to you. It's like a liability because you are going to buy a recharge card, you do a lot of things. And phone is not even inventory because you are not selling phone. But to a reasonable extent, phone is still an asset. Is that clear?
Yes, sir.
I hope I'm able to clarify it now.
Yes,
Blessing,
Yes, sir.
Elizabeth, I hope I'm able to clarify it.
Yes,
So
sir.
now, for the purpose of IAS2, IAS2 actually define inventory in a way and manner that is sweet. And that's coherent with what Aziz said, that when inventory, if phone is being sold, like the business, what they do is just selling on phone. Phone to them is what? is an inventory. So what are inventory? According to IAS2, inventory are assets that are held for sales in the ordinary course of business. They are assets that are what? Held for sales in the ordinary course of the business. That is what they do. They are assets that are held for sales in the what? Ordinary course of, oh, sorry. Let's quickly go to the learning objective. Sorry. So learning objective, yeah. We at the end of this class, we should be able to identify different examples of inventory. We should be able to discuss the component of inventory costing. Please note this part, because for a level, examiner will test you your component of inventory. You cannot run away from that. Identify the cost that will not be included in it. See, I went to the past question. All I did is to leave some of the question and come and put it here as learning objective. Identify the method for measuring inventory. These three topics, after give examples, are something that you need to learn and know it well. Even when you get to professional level, examiner will still ask you, but in advanced way. So what is inventory? I mentioned to us that inventory are assets held for sales in the ordinary course of the what? Business. What's IAS2 talking about? IAS2 is telling us about accounting treatment on inventory, especially on measurement and recognitions. What are the examples of inventory? We have merchandise goods, that is goods that are available for sales. We have production supplies such as petroleum products like oil, diesel, gas, and so on and so forth. Finished goods, of course, you know finished goods, right? Finished goods such as, who can give me an example of finished goods here, please? Anybody? Example of finished goods. So example of finished goods include donut slippers. I know of example of finished goods include maybe baby cream lotion and so on and so forth. Example of finished goods include biscuits. These are things that is common in our society, right? An example of finished goods is Dangote cement, right? Because it has passed through a lot of production process. Work in progress, of course, we know work in progress are goods that are partly finished. Let me say they are in their average stage of production and raw material. So these are examples of inventory, merchandise, production supply, finished goods, work in progress, raw material. Now, when you are determining the cost of inventory, what are those things you need to take into consideration? Don't forget, this is part of our learning objective, because we are aware that examiner asks question on cost component of inventory. Example include purchases cost. The actual purchase price is what we call purchases cost. Delivery cost. What is delivery cost? The cost of taking it from the market to the office or to the warehouse is the delivery cost. It must be part of the cost of inventory. Cost of conversion, of course. Cost of converting it from one stage of production to another stage of production. Import duty and other non-refundable taxes. These are direct costs of inventory. Lastly, in my list is transport costs, handling costs, and other attributable costs to the finished products. Please, here, the cost of inventory are those different costs that you incur in bringing the inventory to a sellable condition. Example include the cost of the purchase, the cost of the delivery, the cost of conversion, import duty, transportation costs, handling costs, and any other cost that you incurred on the what? The acquisition of the finished goods, or the acquisition of the services, or the acquisition of the raw materials. Please note, what are those costs that will not be included in inventory costs? Storage costs should not be included, except it relates to cost of storing raw material and work in progress before production is completed. Abnormal amount of wasted material or labor should not be what? account for as cost of inventory. Of course, administrative overhead, admin costs, administrative overhead costs should not be part of what cost of the inventory. Advertisement costs should not be included as part of cost of inventory. Other selling expenses, interest costs should not be included as part of inventory cost. However, for that interest cost, where inventory is considered as qualifying asset, then the interest cost should be capitalized. That is borrowing cost. So we will not do that on here. When you get to professional class, we'll be talking more of capitalization, that IAS 23. But what we are saying is that I mentioned earlier those costs that should form part of inventory, and now we are talking about those costs that even though you incur them, take them to profit and loss account, don't capitalize them. They include the storage costs. Storage costs, if they are not cost of raw material storing or work in progress before production is completed. If it is, then you can capitalize it. Abnormal cost on wasted material or labor should not be capitalized. Admin expenses should not be capitalized, but expense. Advertising cost expenses, other selling expenses should go to expenses. Interest costs should not be capitalized, except if the inventory is considered as qualifying asset. And I mentioned that is out of our what's it called, syllabus, out of our scope. Yeah, that's the right one. Method of measuring inventory. So before now, we have a lot of method, first in, first out, last in, first out, average price, a lot. But IAS2 recommend just two. And the first one is weighted average price, WAC. And the second one is what? First in, first out. Don't forget, whichever one you are using, you should be what? Consistent with it. Whichever one you are using, we should be consistent with it. Going by my time, I think we are 10 minutes ahead of our normal closing time, and it's likely another person will want to come in for his lecture. So after this slide, I think I'm going to call it an end for this class for today. Is that taking class? So now, I was saying that, what's it called? Basis of value in inventory according to IAS2 is just two: weighted average cost and first in, first out method. Please, very important. So for weighted average cost, what we are trying to achieve at the end of the day is the average cost of it. Average cost. And for first in, first out, is a function of whatever that comes in first is what you are going to issue out first at its price. 1 minute, please. Sorry, class, apologies. So for first in, first out method, so I was saying that items that come in first is what should come out first. Items that come in first into the warehouse is what should come out first. So when that batch is done, then you follow the next batch and you continue in that manner. So we have questions to solve in this regard. But what you just need to know, that items that were purchased first, that were stored in the warehouse, is what will be sold first in their what? In their price. Any question, please?
Yes, sir.
Yeah. This place, we are going to do calculations. So I will not take this one. We are going to take it in our next class. Okay, your question, ma'am.
Okay, so why can't we use the LIFO method?
Okay, so thank you. Before now, we use LIFO method. We use a lot of methods, but this is the standard that government will do. So LIFO method has some shortcomings. Number one of the shortcomings is that the closing stock is giving us is not realistic, because it doesn't pathway for some element of inflation. Are you getting me? So accounting standard is standard that helps us with the reality of financial data. Are you getting me? And again,
Yes.
don't forget that every stock have their BB date, that is best to be used date. You understand?
Yes.
That is best before. Let me put that best before date, right? So
Yeah.
last year Foster did not take into consideration BB.
Yeah.
Are you getting me?
Yes.
So it's possible that goods will just be in there and get to rotting, and you just be losing. So a lot of reality were taken into cognizance to come up with this. Thank you so much, everyone. It's nice having this session with you today, and I'm sure you enjoyed it. So I can assure you that next week our class will start on time. I think I'm the one that is faulty this time, because I was trying to navigate around my system. So that's why the class started late. So sorry. So thank you so much. Looking forward to see you in our next class, where we'll be doing more of calculation. And I believe you are ready for the next task ahead.
Yes.
Thank you, and do have a lovely weekend. I'm sure the next class will commence anytime now, so endeavor to join the next class. Thank you.
All right.
Yes, sir.
Bye.
Bye.
Bye bye, sir.